everyone. Good afternoon, good morning, good evening, wherever you are. Thank you so much for joining this session. My name is Todd Schweitzer. I'm the CEO and co-founder of Brankas, and also a member of the APIX Advisory Council, where we're partnering on technology for open banking across Southeast Asia. Very grateful for those of you who are joining us today. The purpose of this session is to give a little bit of a deep dive into the open banking economy in Southeast Asia. And it's a very timely presentation, I think, because as we saw from this morning's sessions from the Deputy Prime Minister in Singapore, Singapore itself, the host of Singapore FinTech Fest, has actually launched their open API portal called SG Findex just today. Which is very exciting. So Singaporeans and residents of Singapore will be able to be able to link their bank accounts all in one place, which will certainly create a whole new set of fintech products and capabilities. But our session today, as much as we are Southeast Asia focused, I have to admit this is not going to be a Singapore focused session. Indeed, we're going to be focusing on the big emerging economy markets of Southeast Asia, with several examples, particularly from the Philippines and from Indonesia, two of the largest markets here, where there is a really interesting fintech scene and a lot of open banking progress. And this is in spite of a regulatory mandate. There is no top-down kind of regulations here. This has entirely been commercially led, and it's leading to some really interesting partnerships and product development between financial institutions and fintechs. So today's session, what we're going to do is I have a great set of panelists from the Brankas team. We're going to first just share a little bit of a view of what is open banking in Southeast Asia with some real world use cases. Then we're going to, that'll be led by Mike, who I'll introduce in just a second. Then we will have a little bit specifics into open banking products from the banking side or the financial institution side, as well as from the fintech side, which will be shared by Krizelle or Kitch from the Brankas team. And then thirdly, we'll share a little bit of the regulatory view, not going into too deep in detail, but I think it's an important topic, and especially those in Europe often expect that open banking is a regulator-driven initiative. Although in Southeast Asia it's largely commercially driven, I think there's some really interesting recent developments, and by recent I mean really just this year, 2020, by some of the central banks, privacy commissions, data security, IT type ministries around the region. So we'll share a little bit of a view on what we see in terms of regulatory trends. So we will share a few slides, but really this is meant to be a short presentation so that we can then open it up to questions, because if there's one thing we've learned around the region, it's that there are a lot of myths, misconceptions, and eagerness to understand what the heck is open banking in Southeast Asia. So let's jump in. So the first presenter for the next few minutes will be Mike Dickinson. Mike is the Chief Product Officer of Brankas, based in Singapore. But he has a big kind of bird's eye view of what is happening in open banking around the region, and he'll start off with providing some details on real world use cases for open banking in Southeast Asia. Mike, start it off.
Yeah, fantastic. Thank you. And again, Todd, thank you so much for the introduction. I'm just going to go through some use cases that we've witnessed both in Southeast Asia around for open banking, as well as also from around the world, just so that, from a user's perspective, we can sort of set the context and the stage for the conversation today. So firstly, I'm just showing you a application view of GCash, which is an e-wallet in the Philippines. This is the direct debit or pull payments ability for a user to top up to their GCash account using their Union Bank accounts, right? And so basically the user will go through, enter their credentials for their Union Bank account and give their consent along the way. receive an OTP, and then effectively link their account to start commencing top-ups, right? So this is a use case which is in existence today in the Philippines, and with more wallets sort of joining this joining the direct debit pull payments or the PISP model, we're going to start seeing some more sort of direct funds transfers to facilitate for this to happen. The next slide shows. Yeah, so this is actually based in the UK. So this is the Lloyds Bank application, whereby you can use open banking to do statement aggregation for your personal accounts, right? So this is actually a view within that application. You're able to select the bank, any bank within, or most banks within the UK, and then be able to aggregate the consumer can aggregate their statement information directly in the dashboard. Now, why would they want to do that? I mean, they're financial health purposes, purposes for personal loans, even personal financial modeling, right? I mean, the use cases, this allows for a lot of use cases and even products to form as a result. Sorry, next slide, please. So here we have a sort of iteration on the statement aggregation, which is very similar to the consumer model, except for corporates, right? So this is actually a screen from Xero, where they provide a service to be able to do aggregation for statement or transaction information. Businesses are able to link their accounts and, for example, on a daily basis, reconcile this information for the purposes of their reconciliation within their business. Now, of course, that makes life a little bit easier for a lot of the smaller businesses, which is sort of the target market for Xero. Next slide, please. The next slide shows this is a sort of a new model, which is sort of appearing now in this part of the world, whereby people can now start to open bank accounts digitally via a third-party application, right? Again, done through APIs. There's an eKYC process which is in relation to it, but the essence here is that especially during these times, during COVID times, we're able to start creating bank accounts without having to go to the branch, right? And this is a really, sort of really cool initiative that we're starting to see gain traction in this part of the world. And
so what's this example, Mike?
So this example is, for example, somebody can go through each of the steps within Gcash, right? They can effectively open up a bank account directly from a Gcash application using, obviously there are APIs in the back, but the idea behind this is that, you can digitally open your bank account, and, for example, for if you wanted to create a savings account or you wanted to create a payroll account in the application. And then finally, and this is a really cool thing, which is sort of helping businesses, right? And this is specifically to a company in Indonesia called Tokopedia. And what they've allowed for is, basically loan origination for micro to small businesses, right? And they're able to provide it through banks, for example, or NFIs. The whole idea here is that you're able to, for example, receive funding through the Tokopedia platform, which are provided through these institutions to help your business grow, right? Which is really exciting because it means that somebody which is based in the remote parts of Indonesia, right, can receive funding in order to sort of help them out in terms of human resourcing, or they want to help out with acquisition of products in bulk. Right, there are multiple use cases where this is applicable, and we're starting to see, sort of more of these SME lending businesses being connected to these platforms to help these micro and small businesses across Indonesia, and for that matter, across Southeast Asia as well. So, just to give you some of the ideas of some of the use cases that we're seeing in the market today. There's some really cool stuff which we can talk about in a bit. I think Kitch is going to be touching on some of that. Yeah, maybe with that, I'll hand over to Kitch to continue on. Thank you.
Thanks, Mike. So next, I'd like to introduce Krizelle Lazatin. Krizelle, or Kitch as we call her here in Brankas. She's one of our business development and partnership leads based out of the Philippines. The Philippines this year has been a really exciting market for fintech generally. There's been 4 or 5 new digital banks that have already launched. There's a number of new partnerships. The central bank is quite eager, as we'll find out, to support new fintech initiatives. And it's overall just a really exciting time for fintech. So Kitch is going to share some of the emerging partnerships, some of the demand we're seeing from financial institutions to provide open banking products, as well as some of the demand from the fintechs and online businesses that are looking to consume open banking APIs to solve some of their business needs or improve the customer experience. So Kitch, over to you.
All right, thanks Todd for that introduction. Hi everyone, I hope everyone's doing well today. What I'd like to cover in the next few minutes is really talk about how, with the open banking initiatives being thriving, I guess, more or less in the Western side of the world, it's not surprising that we're starting to see this trend also, or the search for these kind of initiatives also on the region. And with that comes with it a growing trend for emerging partnerships. Particularly when we talk about that, we refer to the banks collaborating with third-party providers or financial technology companies. And if you go to the next slide, you'll actually see how things have been changing since the rise of open banking, right? So when we talk about what is the status quo, or I guess what the default practice here is in the region, typically companies who would want to establish or connect access financial services to the banks would need to really establish it on a case-to-case and one-on-one basis, on a per bank basis, right? But with the rise of open banking and with Brankas really helping create the infrastructure or the ecosystem for that, it can change, and this is already happening in some key areas such as the Philippines. We're able to provide third-party providers access to the same financial services as if they approach the banks individually, but collectively, with just one touch point and with basically less hassle, right? And we do this, if you'll see on the next slide, we do this in a very systematic way, right? We do this by taking on the heavy lifting with the partnerships that we do with the financial institutions. So how does that work? Basically, Brankas would have that relationship with the bank and work with them to integrate with their respective APIs, or even build them as may be needed. And then we become the official onboarding partner for the banks, right? And basically help them productize these APIs that may have been available before or not being optimized, and really help them bring this to market, to align with whatever we see is the demand, right? And if you'll see on the next slide as well, that really benefits both sides of the coin, so to speak, right? From the financial institution side, this is very attractive to them because we become, as Brankas, a technology partner, but also a new channel for customer acquisition. And it's very important to note that it comes, with the flexibility that Brankas is able to offer. This integration comes with very minimal costs, right? And as they're able to develop that new channel, we also basically provide them or help drive usage of their bank APIs that were previously maybe not being maximized or utilized, and consequently help them drive transaction increase or increase in different key areas of their business. And of course, as a new channel, because we are agile and swift in terms of how we're able to integrate, it benefits the banks because it allows them to streamline or create a faster onboarding time for clients, right? Because we act as that layer to help these third-party providers connect to them. But equally, as you'll see there, it also has a benefit, or companies really have a lot to gain from this one as well, like from these partnerships that we have. By having these collaborations between the bank and the fintechs, with Brankas being in the middle, or the layer to help connect that one, we essentially provide easy and very fast access to financial services APIs, right? Mike talked about some use cases earlier, such as fund transfers, topping up in certain facilities, even disbursements. And basically, it really helps a lot of these companies because it streamlines the access of financial services through APIs, and we enhance that through our expertise. And the biggest benefit really is for the companies to really be able to focus on their product or their services rather than allocating their IT resources, just focusing on integration on a bank-to-bank basis, right? Which approximately takes, I guess, in the region, or at least here in the Philippines, it would take about 6 to 9 months on a per bank basis. So imagine the time that's actually saved from being able to integrate, and also from the bank side to be able to onboard a lot of these clients, right? So if you go to the next slide, I'm now going to talk about how with these emerging partnerships, it makes sense that we're able to really provide support, or start opening the doors for supporting the demand side, or the demand of a lot of the third-party providers to connect to the banks, right? And so Mike touched up a bit also on this one, but I'd like to focus on some key pain points of the business, and how these partnerships actually help complement and really build on providing these services in a much more streamlined manner. So when we talk about payments, one of the main issues for both parties, so to speak, from the supply side and also on the demand side, is really how we can facilitate the receipt of payment, especially in light of the pandemic. So if you'll see here, the images that you'll see is that Brankas has actually found a way to maximize and be able to utilize APIs such that it will only take, for a company trying to connect to the bank, approximately 6 steps. That includes, driving consent so that it's compliant with data privacy, ensuring that the necessary security measures or the authentication processes are in place on a per bank basis. And with a click of a button, we can actually facilitate that instantly. And we design it in such a way that, as banks expose this and third-party providers connect to it, it will fit seamlessly, whether it's connecting to the bank, but also designed to be able to sit inside the mobile application of the third party that's trying to connect, right? And if you go to the next slide, you'll also see that, of course, as an offshoot of the payment pain points, if an end user or a client is able to accept instantly payments conveniently, an offshoot of it, or it makes sense that we're also able to provide the facility of them requesting payments, right, to be able to communicate with their end users. And Brankas has actually also found ways to leverage on an API that will allow, whether it's micro SMEs to request for invoices on a case-to-case basis, or the more mature SMEs to do some bulk invoicing. That facility or that API capability or functionality has been enabled by Brankas, so that ultimately the payment functionalities or the payment challenges when it comes to connecting with the bank and enabling it for the end users becomes much more streamlined, and of course very much more convenient. But we're not just talking about payments, right? Another pain point that we see that the consumer side or the market is looking for is access to data. And on the next slide, you'll actually see that data access, especially here in the Philippines, where we have a regulatory body that actually monitors this, it becomes a very sensitive topic when we talk about, there's a high demand for it, but they're always very careful. A lot of third-party providers and even banks are very careful in how to approach this. But Brankas, again, comes in and with the expertise and the knowledge of the market, and also how we can structure the different APIs to provide instant access to identity data, real-time balance or transaction data. This is the AISP that Mike was actually talking about earlier. And really, again, you'll see in the images here in the pictures that it's a very simple process flow that we can enable, but ultimately can benefit a lot of the third-party providers and provides a channel for banks to actually start exposing that information in a very safe and secure manner. So again, it benefits both sides of the spectrum in that manner. And finally, on another key opportunity, I wouldn't really say this is a pain point, but another key opportunity, as Mike was talking about, and that's been growing, we've seen it in the likes of GCash, is in light of the changes in the pandemic, a lot of the banks have suffered deeply because of their physical network or their branch, their distribution network, which is primarily the physical bank branches, have been impacted by the restrictions of the pandemic that's been imposed under the pandemic. And so they've been burdened, or they've been challenged to actually start looking for other ways to digitize that process. And instead of them just finding, scrambling to be able to develop this on their own. What Brankas is able to do is to help create that dynamic partnership wherein, through the development of these APIs, these account opening APIs or credit or loan origination APIs, we're actually also able to offer to the banks different or new channels that are not just limited within their, I guess, ecosystem, right? We are able to introduce to them other third-party providers that can serve as additional network. And on the financial or the demand side, this becomes also very attractive because it basically is another service altogether, or it's a very much complementary service to, let's say, e-commerce or those that are doing, lending business. There's a lot of opportunity for customer engagement in that manner. So yeah, ultimately, I just touched on 3 pain points in key areas, but Mike has talked about some more real world examples, not really available yet in the market or in the region, so to speak. And I'm excited to see how this evolves or how the region begins to adapt to a lot of these open banking initiatives. Right.
Thank you very much, Kitch.
All right. Thanks, Todd.
Thank you very much for that. Next, Donald will quickly share just a quick view on some of the trends we're observing from the regulator's point of view in the region. I also want to encourage anyone who's watching live and has questions, please add your questions to the chat, and we'll bring those up either live or right after this last presentation.
Yeah, so thank you for that, Todd. Good afternoon, everyone, and I'm here to discuss with you the regulatory perspective on open banking. So just for some context, again, we all know that there is a huge demand for digital banking products and financial services brought about by this COVID-19 pandemic. So banks see this as an opportunity for growth, and they are eager to get started so that they will address this market need. Answers and solutions to these problems and to address this demand will most probably be maybe new or maybe unheard of. And because of this novelty and complexity involved in introducing new concepts, products, or services to the market, financial institutions, being highly regulated institutions, are always curious to know what the regulators think about these new products and services before they take any concrete action. They do not want to engage or to expend resources and time wherein there may be a high risk that the regulatory framework may change over time if they engage in such activities that are still currently unregulated. So this is precisely the situation for open banking solutions and services, especially across the ASEAN region. Open banking is still an unregulated activity, or at least there are no specific laws that say open banking regulations as the heading or the title of the regulation. It's currently a mix of existing rules on financial services, bank information secrecy, data privacy, data security, among others, and simply finding what's applicable among these regulations to apply to open banking services. However, based on experience and conversations that we had with regulators, we see that regulators also recognize the benefits of open banking and why open banking matters. So among which include addressing issues on financial inclusion, promoting industry competition, expediting product innovation, enforcing data security, and empowering the ordinary person over his own personal data. So long story short is that regulators across the region welcome developments in open banking. This is true even for the emerging markets. They are aggressive to get open banking services rolled out in their respective countries. So as what Todd mentioned earlier during the introduction, instead of a top-down mandate where government acts first, regulators are also keen on the opt-in model, wherein the private sector takes the initiative to commence perhaps pilot projects based on voluntary participation by banks, different technology providers, and with explicit consent from the ordinary consumer. So this means it will be entirely optional for whoever wants to participate, for both the financial institutions, big or small, and on the part of the consumers. So in the process, the private institutions actually educate the regulators regarding the products and services offered in relation to open banking. But a key aspect is really to secure the approval of the regulator in order to conduct these projects or pilot projects. This approval sort of gives a sense of confidence and security that a pilot's implementation is controlled under the supervision of the regulator. So the sense of this opt-in approach is really, if we want to know how open banking technology matters to the ordinary person, we can do so by observing real-world customer behavior through a pilot. And simultaneously, regulators are also in the process of formulating specific open banking regulations and frameworks with enforceable provisions. So to illustrate these developments in open banking, for example, in the Philippines, the Bangko Sentral ng Pilipinas, or the BSP, or the Philippine Central Bank, is actually on track to issue specific open banking regulations by the end of this year. They are labeling it as the Open Finance Circular and is given priority by the governor himself, treating it as one of the most important milestones to achieve in line with the BSP's 3-year digital transformation plan. Second, and consistent with the same plan, is the BSP also uses a regulatory sandbox, which they call the test and learn approach. So what happens here is that the BSP invites fintech companies to test their products and services in a secured and supervised environment by undertaking pilot projects within the guidance of the regulators. Lastly, the Philippines has also been one of the first in the region, together with Singapore and Malaysia, to enact data privacy laws. Complementing these data privacy laws, the Philippine National Privacy Commission is now actually in the process of formulating a data privacy policy code, specifically to address data privacy issues in the banking and finance sector. And one of the topics considered to be included in that code is open banking implications on consent mechanisms, data security, and consumer protection. In Indonesia, we have similar initiatives being undertaken. The government is keeping itself open also to proposals from the private sector, particularly relating to fintech projects. And Bank Indonesia has actually plans to issue also open banking regulations early next year. And this is consistent with the Indonesia Payment System Vision of 2025, where open banking is prioritized also as one of the 5 main deliverables. And targeted also for legislation early next year in Indonesia is the Personal Data Protection Bill, which will set data privacy principles and legally enforceable provisions for data security and compliance. So based on all of these developments in the regulatory side, we can reasonably conclude that open banking services can really serve as a catalyst in order to address changes in lifestyle that will likely remain even beyond the pandemic. And these changes through open banking will be able to drive growth and benefit to the overall financial ecosystem. And this is why regulators should not set aside open banking as an agenda for another day. And we believe that they are doing the right thing now by prioritizing and acting on it. So yeah, back to you, Todd. And
great, thank you so much, Donald. So if you could stop sharing screen, we'll go to the Q&A portion. For those in the audience, if you have questions, happy to address your questions. We'll pull those up. But in the meantime, I want to start by asking. I'll start with Mike. So, what are some of the reasons why banks are looking to invest in or build out open API capability, or open API or open banking capabilities? And is there sort of universal a demand, or is there kind of certain kinds of banks that are kind of more eager to launch open banking than others?
Yeah, thanks for the question, Todd. It's definitely not universal. I'll start with that. So really what it comes down to are that banks are, especially during the pandemic, right? They're looking at how to help, organizations digitize their financial services, right? But really what it comes down to in the end is really what Kitch was referring to before about that demand side requesting for access to these things, right? Now, of course, there are some banks which are more willing to do that over others, right? And the ones which are more willing to do that are the ones which are looking to innovate. And this is not a unique situation to Southeast Asia, right? It's something which we see across the world. It's just that I would say that there is definitely a hunger which is coming from these sort of mid or even small tier banks, right? And so, and of course, like there's another component of this where they can't actually effectively open up their services themselves, right? So they have to turn to other organizations to do it, right? They want to be able to supply to e-wallets. They want to be able to supply to, payment gateways or to any, other fintech companies or even any other sort of company for that matter. And yet they can't because how do they get access to it, right? You've got these banks which are sitting on these antiquated core banking systems, right? And in Southeast Asia, antiquated can mean pen and paper in the really small situation, right? But like, how do they even, gain access to that? Well, they can't. So like, they're basically stuck between a rock and a hard place. And then therefore they turn to the larger guys.
If each fintech partner is a new IT project, it becomes, they want to connect to fintech partners, they see the value, but if each one is a new IT project, it becomes cost prohibitive, right? Especially if you're a smaller bank.
Correct. And that's, part of the reason why too, you see, some of the bigger e-wallets, of course they're connected to like the larger banks, because, there are agreements which are set up. And of course, there is the other component where a lot of the account holders are with those banks, right? But it really doesn't give a chance to some of the small to medium guys in order to open up their services. So we're definitely seeing a pickup on that side for sure.
And Kitch, so thanks for that, Mike. And on Kitch, on the fintech side, why not just go to the bank directly? Like, why work with an API service provider? What are sort of the trade-offs there?
Yeah, that's a good question, Mike. Todd, rather. So actually, we don't prohibit a lot of these fintech providers to go directly to the banks, right, and build that relationship. But again, what we're looking at is having these separate and individual engagements with all and each and every bank that you would like to connect to, and just the time to establish and integrate and I guess implement all of those relationships or engagements approximately takes at least half a year, like 6 to 9 months. And if there's some unique integrations there, you'd be lucky if the bank already has it, or if that, it would not require some development just for you to be able to match to the banks, right? So with Brankas coming in, we basically take away that burden from the third-party providers or the fintech players, because they just have to connect to us to be able to have access to these different partner banks that we have. And this list keeps adding on as we're able to build more relationships. And, with the partnerships that we have with the bank, we're also able to introduce more APIs that can be conducive for their service. Like, it's not just us building something for them, but maybe we have already an API with a partnership with a bank wherein we're introducing a new API that a third party might not have seen yet, but in the long run, it's beneficial to them. Like, it's part of their future roadmap. So it's really beneficial because we are not only able to help them in the current status quo, but really start giving them some insight and providing them some opportunities to start exploring other, business initiatives for their side.
Yeah. And another question for you, I guess, Kitch, is so we talk a lot about the payment use case, right? So making the PISP model, right? Enabling bank transfer payments. And of course, that's so valuable in the emerging economies of Southeast Asia, because bank transfer is by far the most common payment method for online transactions, right? Where card penetration is much lower, where e-wallet penetration is increasing, but still relatively low as share of population. And so yes, the bank transfer model is an important use case or an important open banking product. But can you differentiate between payment initiation as an open banking API and a payment gateway service? And what are some of those distinctions?
Sure. So as a payment initiation service, what we really do is we facilitate, again, the initiation or the starting point of that particular transaction. And this largely differs from the intermediary or the payment gateway model, wherein they do facilitate the transaction, but they come in between, right? The funds are actually transferred to their particular corporate account, and then it's up to them to actually start disbursing it or remitting it to the respective banks. With Brankas, the PISP model is actually us creating that API integration so that it's a direct transaction or it's a direct debit pull, a fund transfer from an end user's account to the destination account as set by the bank or the third party provider, right? And so at no point in the entire process does Brankas handle the funds or touch on the funds. We also don't store any data, as Mike mentioned before. And so it becomes more streamlined and much more secure because the funds land immediately as where they're directed to. It does not actually land halfway into some other aggregator's account and you wait for the turnaround time for them to actually start remitting or sharing that back to the banks or the destination account.
Yeah, yeah, thanks. And Mike, what about security, right? So of course, IT security is always a question when it comes to kind of new digital products, especially in financial services. But what is it about open banking APIs that provide that necessary security for users? And I think a common concern we hear in Brankas is that I think number one, customers often are less digitally savvy when it comes to kind of online banking transactions and accessing online and mobile banking services, and therefore potentially more susceptible to scams. So just curious, kind of what is as a product lead and kind of someone who thinks deeply about this. I mean, how are API products? How do we make sure that open API products for financial services are designed and managed in a secure way?
Yeah, thanks for the question, Todd. Without going into too much of the technical detail, so first and foremost, it's probably the number one question that's even asked to us by banks, right? And then followed very closely by NFIs. Ultimately, what we're trying, with open APIs, right? Given the fact that there are two real things which are happening, right? So number one is that first and foremost, consent is explicitly requested from the user, right? And we require that consent because effectively it means that for example, to commit a funds transfer, it means that like they are moving funds around, even though it's from effectively bank A to bank B, not going through any systems. But in order for this to happen, like we need to make sure that they consent to that. So that's sort of the political regulatory side of things, right? Then there's the other aspect, right, where banks are providing their own IDP in order to for example do a fund to commit the funds transfer using the bank credentials, right? And so at Brankas, for example, at no point do we store credentials of users. It is stored it's captured at the device level, tokenized, and pushed through, right? And so of course there are situations where people will feel uncomfortable, especially when they experience this for the first time, right? In fact, even on big e-wallets, right, there are, even if, for example, Gcash will ask for credentials in order to link to your bank account, it's a little bit of a nerve-wracking thing because you're thinking, as a user, does that person have access to my details, right? Whereas from the technological front, of course, they don't, right? It's it is a completely secure way of doing it. And of course, over time, as we start to see more organizations have this. Sorry, I've got cut here.
No, you're good. You're good.
Okay. Yeah. So as you know, more organizations start to utilize this, I think people will become more comfortable with the ability to do you know, funds transfers or retrieval of statement data and so on and so forth. So yeah, that's basically the situation.
Great, thanks, Mike. I guess one more question before we wrap up for Donald. Just for those thinking about launching open banking products, or you know, or thinking about making a play in open banking in Southeast Asia. I mean, let's take Indonesia and the Philippines as examples. Do you think that there is, do you expect that there is going to be some sort of top-down regulatory mandate in the next couple of years, or is this going to be led sort of commercially driven by, you know, financial institutions and fintechs that are building these products? What can you kind of predict based on what you've observed so far?
Yeah, thank you for the question, Todd. So as what we've been mentioning a while ago is instead of a top-down mandate from government, wherein government acts first, we expect that there will be a reverse procedure wherein regulators are now keen to accept an opt-in model where the private sector takes the initiative to commence different projects that will be based on voluntary participation by banks or different technology providers, and even the customers who have to opt in to consent to the services of the banks that will be offered to the market. So that means
so voluntary participation, but then also voluntary kind of willingness to be supervised, to share reporting data, to share kind of what they've been learning from the market as well, right?
Yes, correct, Todd. So that means it's actually entirely optional for the banks and financial institutions to participate in these projects. So both big and small financial institutions, and even the customers who are willing to consent to accept and engage in the services of these banks and financial institutions, will be under the supervision of the regulator. So the regulator will be the one approving such pilot projects and will be the one setting the standards under controlled environments, which is actually what we call the regulatory sandboxes of these of the government.
Great. Yep. Thanks for that, Donald. Okay, so I think our time is up, and I just want to say thanks to the audience for the great questions, and thank you to this team for some really interesting insight into open banking in Southeast Asia. I think to summarize, what we're seeing is this is not unlike, for example, Europe or the UK. We're not seeing a top-down regulatory mandate. This is commercially driven. And there's some really interesting use cases emerging that are solving pretty fundamental problems with fintech infrastructure or financial services infrastructure in the region. And we're seeing, we're seeing the first wave of banks and fintechs that are publishing and consuming these open API products. And we're starting to see the very beginnings of a next generation of products like account opening, loan origination, and some more value-added open APIs. So thank you very much, Mike, Kitch, and Donald, for the time today. Thank you to SFF and to the APIX Oxygen organizers, and have a great day, everyone. Take care.